think we're certainly independently owned and managed, so we're not part of a large institution. That was deliberate, and that fits into the whole structure of the Heritage Group, which numbers nearly 200 people. The company is owned by its management, and it's got very short lines of management communication as a result. So that we fit into probably a growing independent sector of people who've worked in large organisations, so have a mindset of the disciplines you need to run a large organisation, but the immediacy, the intimacy and the urgency that goes with owning your own business and running your own business. Having said that, 200 people, we're not exactly small. So it's almost that phrase of that we're large enough to deliver on a reasonable scale, but we're small enough that our clients know who we are, and more importantly, we know who our people are. We don't have to sort of look on an intranet to identify every single member of staff. I started out with a very clear focus, which was private equity, where we've been in the private equity business for over 2 decades as a team, not within Heritage, but most of my team have worked with me for over a decade, and in the case of the senior management for 2 decades. So private equity was obviously a core. Property and the overlap between private equity and property became a key. We then very quickly came involved in infrastructure, which arguably brings both disciplines very much into play, and emerging markets, where again we've got a track record of firsts in emerging markets. If we take Guernsey as a jurisdiction, it's got coming up for 4 decades of experience. Now, some would say I've been around for nearly 4 decades, but not quite. The consequence of that is that we've created a very solid infrastructure of legal, accounting, banking, and other service providers, not least of which fund administrators, I would say that. But I think we all link together very effectively as an industry. We work very closely with perhaps the most important service provider we've got here, which is our regulator, who demonstrated a pragmatism and a willingness to enter into dialogue with industry, which, whilst we respect each other's perspectives, I think has been a key part of the way Guernsey's developed. I think we've also been able to evolve, so we've been able to move through different phases and to work on the opportunities that have come our way at the same time as cementing on core businesses that we've had around for a number of years. I think that's a difficult judgment call. I think the actual fund administration businesses that operate in Guernsey spread quite a wide spectrum of capability. So as I said, we specialise on a number of different areas, but we have got fund of hedge funds, so it's something they're not alien to us. Other players just focus purely on hedge funds, and they're quite willing to take on and develop specific hedge fund capability. It will be difficult to envisage at this point in time just exactly how the hedge fund market's going to evolve as a result of current shakeout, but unquestionably there will be different strategies deployed post the financial crisis than we've seen before. And that might well play into Guernsey's hands in terms of emerging market and distress, and a number of other specific thought-led investment strategies, as opposed to playing a process-led investment strategy where you need huge amounts of prime broker capability, a lot of expertise and functionality to cut NAVs. Heritage is obviously Guernsey headquartered, and I think that would like to remain for the foreseeable future. We already have offices and presences in London, Jersey, Malta, Bermuda. We have a small presence in Gibraltar, which we're potentially going to grow. We certainly see Malta as being an interesting alternative for play for promoters who want an EU capability. And so we will probably look to Malta as the balance to our existing business on top of expanding a capability in Jersey. I think those are the likely places for us to go, because we've got a very strong culture. We've got a strong culture of client service and of thinking things through, and you can't just simply plug and play that into every jurisdiction you might want to go to. It's fair to say I think we've been probably very busy, and I think one of the advantages is that certainly my fellow directors and quite a few of my core team were together at Barings in 1995. So I think we know the magnitude of a crisis, and I think those skill sets, unpleasant as they were to learn in the first case, lead you to deal with what's important rather than what's urgent. It means that above all you don't panic, and I think we've also, as a result of what we've already been through in past experience, been very careful about the asset classes in which we play. So in many cases we've actually been more active. We've been quite actively involved in private equity investment. We've continued to close new funds, and we have at the same time probably activated a more intensive cash management program than we would have had otherwise. And I think it's quite unusual to see bank reconstruction of the sort we've seen, where 5 banks are nationalised on one day and they appear on page 4. I mean, that is, you've got to look at what we've been through in context of those kind of fairly earth-shattering criteria. Having said that, I don't think we've really had issues that we haven't been able to handle at all. And our asset classes, I mean infrastructure in particular, I mean that is an asset class that still very much in play, and sort of leads you to think that the yield will become a driver for people's investment philosophy. Private equity, as I say, because we have a good group of managers, then I think the book of business that we have is more work in progress. So we see the next 2 to 3 years as being exceptionally busy, both in terms of the investing and the activities that relate to that. We have put our custodian relationships, such as they are, on careful watch. I think that's unquestionably an area that probably anybody who's got custody business will be scrutinising the creditworthiness. And the important thing obviously for Guernsey custodians is that the assets are very clearly segregated. So your issue is really simply the cash on the balance sheet, and we've got a number of issues in terms of just making sure our cash is properly segregated and we don't have concentration risk. I do think that Guernsey's had a stronger track record of sensible, pragmatic regulation. That should play into the current era, where people will want more certainty of the outcome of an investment product. And it's our job, I think, as an industry to work with regulators to come up with that new era of pragmatic regulation. And I think I'm not here to knock what takes place in other jurisdictions. On the contrary, I think we're a very effective user of different jurisdictions here in Guernsey. But I think the one thing that Guernsey may well have as a result of this overwhelming flight to good corporate governance is that we can bring opportunities into Guernsey, manage them properly, and that above all I think will be do it properly, do it right. That will be Guernsey and continue to be Guernsey's USP in the future.